Hello, can you hear me all right? Oh, thanks for the clicker, David. Thank you very much. I'd like to thank Shelley and everyone at MEREDA for all the hard work they do on our behalf as brokers, developers, bankers, people who live in Maine, and it's terrific. I asked Shelley if I could be the last speaker today, but she said she promised that to Nate Stevens, so I'm second to last. So I'm going to talk about the Southern Maine retail market for 2016 and what we're going to see hopefully heading into 2017. At the end of 2016, the Greater Portland retail vacancy rate was 3.44%, down slightly from what it was last year, and certainly way off where it was at the height of the Great Recession in 2009 and 10. You know, it's a little deceiving when you say 3.44% because there's obviously some things that are behind that, you know, that don't sort of show up in that statistic. Bob's Furniture in South Portland, for example, at 84,000 square feet was a retail space that became vacant in 2016, but it's been purchased by a church. So it's no longer a retail space. So if that 84,000 square foot space was in there, our vacancy rate would probably be about 4.8%. Another thing to note on this, and we'll see this a little bit later when I show towns, is there's a space in Falmouth that has been chronically vacant for a while. So if that space, you know, I think it's a lack of commitment from an owner to sort of convert that space to a new use or to cut it up into smaller spaces. So that is sort of also adding to a little deception in the vacancy rate. It's really sort of an unhealthy rate for vacancy. It's very difficult if you were trying to find a space to open a new retail endeavor, be it in Portland or in South Portland, and most of the surrounding towns in Portland. So it's really not a great healthy thing. It's great for landlords, but it's not that healthy for a market to have such a low rate and so few choices. It makes it very difficult, just like trying to buy a single family home. Versus the national vacancy rate, our rates are much lower. 11.2% was the national vacancy rate at the end of 2016, heading into 2017. And I think that part of that is that we're such a small market compared to a lot of the bigger markets around the nation. We only have one major mall area, and there's several different retail areas around Maine, but we have one main mall area where a lot of states would have several major retail areas, 5 or 6 main mall area center size retail markets. So that sort of gives a little bit of a deception as to why it's off, because so it's something to consider. So this next slide here shows the by-town vacancy rate for retail centers that we track. And again, we can't track like every little retail space everywhere. This is sort of major centers or bigger freestanding retail buildings. But you look by town, and there's what you see I mentioned earlier in Falmouth at that Shaw's Plaza, that since they moved down the other end of that center, that space has been vacant, and Lamy Wellahan has since moved out of that end of that building as well. So it skews the numbers a little bit. It's really, I think, more a commitment from that landlord to try to relet that space or repurpose that space, which is something I'll discuss a little bit later, which is happening with some older retail spaces that are, or chronic vacant spaces, or spaces that are occupied by retailers that are sort of losing market appeal. So as one might expect, with very low vacancy rates the last couple of years and very low new supply added to the market, the absorption rate for retail space in the Greater Portland area for last year was only 9,467 square feet. Now, I would have had, if Bob's Furniture, for example, had become a retail space and it was vacant the year before, it would have shown a greater absorption rate, but frankly, it's not retail anymore. So this is a natural thing you would see in a market that has not added a lot of new retail space, which is really in sort of dire need for new retail space. Another chart here, next one, is the average vacancy, average asking rate for vacancies tracked in our report. It was $17.50 a square foot at the end of 2016, and it was an 18% increase over the end of last year. And again, you know, as all these numbers, and a lot of these numbers are a little deceiving, because with such little vacancy, a couple of high-priced retail spaces can really skew this market. You know, that we're seeing some retail rates on Marginal Way at $40 a square foot, triple net. If you throw a few of those into this mix, so it looks great on paper here, geez, the rents are going up. All my landlords are gonna call me and say, how come I'm not getting $17.50 a square foot? But it's really a function of a lack of available inventory and a few spaces being priced at higher market levels, or they're newer spaces that can ask for that sort of rate. Jumping down into the Old Port, which is an area I like to focus on. You know, this is an area where it's almost impossible to track a vacancy rate because of the number of spaces, where they are, the size. It's just so many, and it's so diverse that it just is very difficult to track. But I will say this, in my opinion, based on my knowledge of this market, I would say the vacancy rate for retail space on Portland's Peninsula and its downtown is probably between 1 and 1.5%. Now, it's just, and that might even be a little high. There's almost no space available for retailers currently. You know, and one of the reasons why it's so hot downtown is, as Britt and David, everyone has mentioned, the development on the peninsula. You know, peninsula's become a really cool place to live, to work, you know, to visit. The new hotels we've had in the last few years, the Hyatt Place, there's another hotel coming. There's a changing environment down here. The restaurant scene is one of the hottest anywhere. So it's driving people to this peninsula, both from tourist perspective, for people who want to live here, for people who want to live and work here. And it's really a changing dynamic, and it's putting pressure on the retail segment. There are some new projects that are proposed, such as one down on Woodbury and Union Wharf. And J.B. Brown and Sons is proposing a new project, or building a new project, I should say, on York Street, which will add 17,000 square feet of retail space to the market. And there's a slide that got mixed up. I'll show a few more in a little bit, but it's something that we certainly could use. Downtown, as I mentioned, transforming. It's become a great place to live, and a great place to live and work. And this can be seen in particular on the Middle Street corridor. And, you know, national retailers in particular have been entering this market in the last few years. First, there was Urban Outfitters, and then a couple of years ago, Anthropologie. And then this year is going to be West Elm on Middle Street. There'll be about 14,000 square feet. Athleta signed a lease on Middle Street. Canal Plaza is East Brown Cow is going to undertake a $5 million renovation of that Canal Plaza, which is sort of an area that's underutilized, and build a small retail building and just sort of, you know, make a better work environment and a better place for people to conjugate before and after work. And I think that's something that Portland is on the cusp of becoming, this sort of city where you don't leave. You know, you go to work, you live here, and you after work you hang around, and that's where we're headed. Now, a lot of people say to me, is the influx of national retailers, is this killing, you know, the downtown? Is it going to kill the Old Port's character? Everything we thrive to be as an independent, retail-based area, some cool place, and I say no. Most of the retailers that we're seeing, the nationals that come downtown, are the sorts of retailers like Anthropologie, and Urban Outfitters and West Elm. They like to be in cool downtowns. I think it's a validation of how cool Portland has become, more than, you know, we're not seeing Dunkin' Donuts everywhere and McDonald's. These are great retailers that like to be in the downtown area. Also, a lot of the spaces that they're occupying are kind of too big for most local retailers. So I had that Anthropologie space, and I took too long to lease it. But it took a long time to find Anthropologie to take that space, and not everybody was happy about that, that they came, but it really, at 8,500 square feet, there's no local that can take that. But it's not killing the locals. Angela Adams moved onto Middle Street near Anthropologie, and so did Rough and Tumble. They're both of them are local retailers. They produce some of their stuff in Maine. The Portland Art Gallery is on Middle Street. They expanded this year, in large part because Athleta, and Anthropologie, Urban Outfitters, and all sorts of retailers are in there. So they'll draw more people in to that area. It will help the local retailers as well. The other factor is that most Old Port retail spaces are sort of small physically, so they don't really lend themselves well to being suitable for a national retailer. So that will help to keep a good balance, I think, and Portland won't lose its soul and become, a big strip of national retailers. Now, moving on here, I'm going to talk a little bit about a couple areas that, because the Old Port's expanding out. India Street and East End. There's another hotel being built over on the other side of Franklin, Ontario. Gorham Savings Bank is renovating 1 India Street, and they're going to move in there. There's the Bay House condos, of course, have been built. There's another condo project being proposed on India Street with retail space on the first floor. And, it's terrific to see that once thriving neighborhood. The India Street neighborhood was always an iconic Portland neighborhood coming back to life. It's great to see, and as I mentioned, Gorham Savings, one thing you see in vibrant economies and vibrant cities is a lot of banks. So Gorham is there, and Saco Benefit has opened a branch. So we see a lot of number of bank branches taking up retail spaces, which is healthy as well. Moving on to the Bay side, as I mentioned earlier, I think Justin LaMontagne mentioned that they sold a building for $200 a square foot, and now there's a rug store in there. It was an electrical supply company. So we're seeing, things like that happen. They're joining Coffee by Design, Young's Furniture, Cycle Mania, Rising Tide Brewing. There's new apartments built down there. This is an area where, 10 years ago, there was nothing going on down there. I mean, it's amazing to see the difference. That's on the east side of the Bay side. On the other end, the AAA building on Marginal Way is going to be converted and rented as retail. So that's in play right now. And then you move further down and you have, on the west end, Kennebec Street, Marginal Way, you have Chipotle, T-Mobile, Allspeed, joining Trader Joe's. We have a Whole Foods down there. It continues to develop, and then you jump up the hill from the East Bay side, and you have Washington Avenue, where Jed Harris has the old Nissan building humming along, and they bought the old Creighton Florist building, and they've got tenants moving in there. Again, these are retail areas that we never saw retail in. I mean, there's Bunker Brewing over behind the prison. There's over at Thompson's Point, we have Jay's Chicken Shack and Bissell Brothers. And so retail is morphing a little bit. It's changing from traditional areas, and it's showing up in offbeat areas. And I think it's a positive thing. It's a positive thing for all of us, and it's a positive thing for neighborhoods as well. I just want to go over a lot of retail sales last year. There's a list here. There's square footages and pricing per square foot. I want to mention a couple, as they've already been mentioned before. The Mount Auburn Plaza, Craig Young sold for $20 million, 110,000 square feet. The Walmart Plaza in Falmouth that Steve Bauman sold, 109,000 square feet, $12.436 million. And another interesting sale was Acadia Realty purchased 4 grocery-anchored centers, Wells, Waterville, Bangor, and Wyndham. I wasn't able to get pricing out of, and it wasn't available online yet, so I couldn't get the pricing on that. But that's a major sale, 595,000 square feet. So you can look through this. There's a bunch of sales last year that were over, $1 million and above. Significant retail leases. Again, there wasn't a lot of space to be leased or absorbed. There's a few in here that probably should be mentioned. Lamy Wellingham in Falmouth, West Elm on Middle Street. It says 16,000. It was actually about 13, 14. Bunker Brewing, 17 Westfield Street. Urban Air, Clark's Pond. There's a few in there you can look over. As I mentioned, this slide actually belonged 2 slides ago. But as I mentioned, with almost no vacancy retail in the Old Port and downtown, help is on the way. There's a couple pictures of some new projects that are proposed or are actually going to happen. As I mentioned, J.B. Brown, 17,000 feet, Canal Plaza, the Rufus Dairying site. Rufus has been is closed, and that's going to be redeveloped. It'll be retail on the first floor, pushing us further down Commercial Street to the west. There's a proposal for the Brown Trading, next to Brown Trading. There's another one I mentioned on Widgery and Union Wharf. And of course, there's the old Portland Company site, which will be, some years in the making, but again, that should help add and alleviate the retail pressure for retail space. But a lot of these do have a residential component, which will only help drive demand for more retail space. I'd be remiss if I don't mention the Maine Mall area. The Maine Mall area is doing fine as well. It's a major draw for both retailers and shoppers alike. There are some issues, of course, with like all retail or all markets. It's not all a rosy picture, but it continues to be a major draw. Sales for this holiday season in the Maine Mall should wind up around 4 to 6% higher than last year. That's a little bit more than the national average. The traditional department store is in a transition period. So they're Macy's of the world, Sears, as we all know, JCPenney. There's some transition going on with some of those traditional stores, and consumers are a lot more fickle and a lot more, they change tastes a little more quickly than they used to, 20, 30 years ago, and 10 years ago. So in the Maine Mall, the former Gap and Lane Bryant spaces, totaling 22,000 square feet, are being leased by H&M. And H&M's current space at 17,000 feet is in negotiations currently. The former Sports Authority space, currently vacant at 43,000 square feet, has several interested parties for all or part of that. And another note from the Maine Mall, General Growth Properties leased a space they purchased across from the mall to CarMax, and they spun that off in a sale in this past year. I thank Craig Goris from the Maine Mall for giving me some input of what's happening there. A little more update on retail trends in the mall area and sort of a national update. Macy's plans to close 68 stores, including its 143,000 square foot Bangor store. Sears plans to close 108 Kmart's and 42 Sears stores by spring of 2017. And mall owners are having to become a lot more creative in repositioning these assets. And in some ways, it can be a positive because, let's face it, some retailer that's not drawing enough people or doing enough sales cannot be good for the other retailers in the center. So around the country and even in our area, we're starting to see repositioning of retail spaces when a major department store closes. H&M, Forever 21, Dick's Sporting Goods, some supermarkets, specialty food stores, gyms, restaurants, theaters, cool food halls, among others, are helping to fill a void left by closing department stores. As I mentioned, it can, in fact, there's always a positive from a negative, and it can actually be helpful for centers to have that. And some centers will see an office space. This is a picture of the former Bob's Furniture at Clark's Pond. a perfect example of repositioning of a retail store. It was an 84,000 square foot store that moved over to Scarborough Gallery and downsized, and that has been sold to a church. So it's going to be, you know, then they took up a piece of the building next door. They're going to have an indoor soccer field. They're going to have a you know, huge hall. They're going to, it's amazing, but it's no longer retail. So it's been repositioned as a non-retail use. And next door, Urban Air, which I would consider a retailer, it's an entertainment sort of use, but there were retailers there, they've taken over that space. So this is something that you're going to see happen, probably not in the Maine Mall yet, because you know it might take some time, and the Macy's at the Maine Mall does well, and so doesn't the Sears. But over time, you'll see this trend happen elsewhere, and probably in the Maine market as well. Another trend nationally and in Maine as well is the single-tenant retail property, you know, like a Starbucks standalone, McDonald's standalone. The high net worth investor, it's a huge demand for this sort of product because you don't own, you know, a mall with 10 tenants. You have one tenant, almost no landlord obligations. You usually, oftentimes you have a credit tenant, one check, one tenant monthly. Sometimes it doesn't have to, so you don't even have to be in the same state. You don't have to go out there every day. You don't have to, and there's huge demand for this, you know, around the country, and we're starting to see that here in Maine as well, as an investment for, you know, because retail compared to office, once you own the Starbucks, it's a Starbucks. It doesn't, you know, I do a lot of office leasing as well, and office space comes vacant every 5 or 10 years. You have to go back in, you have to redo the office space. Retail is a lot more simple as far as tenant improvements when it turns over than office, and then a lot of segments of commercial real estate. So that's why one of the reasons we're seeing high demand for single standing or two tenant retail buildings, especially if it's credit tenant. Looking ahead to 2017, I think, and we think vacancy rates will remain low. However, I don't think they have a lot of room to drop at 3.44%. And as I mentioned, if you took that Falmouth space out, which is, yeah, good luck if you want to try to lease that, you know, it's really there's almost nothing out there. Lease rates should remain stable, but after rising over the past few years, they should moderate. The first new major retail center in Greater Portland in years in Westbrook, Durago Plaza, Jeff Gove, hopefully will break ground this spring. That's the first new major retail center. Could be up to eventually 500,000 square feet. And after an active year in 2016 in shopping center sales and retail building sales, we think 2017 should be slower. Increasing interest rates will have an impact on pricing and cap rates for retail and investment properties. I don't see how they can't, really. I mean, maybe not. I don't think rates are going to cruise dramatically higher, but again, rates have been extremely low, helping keep returns down. So I think there will be some impact from rising interest rates if they continue to rise on values and on cap rates. Online retail sales will continue to eat into the overall bricks and mortar sales. But you know, when you dig down deeper into those numbers and you look at sales, shipping fees, so on and so forth, it's really not as big as it is. It's still under 10%, probably 8 or 9%, depends on who you listen to. So it's I don't think that that will continue to grow. But again, bricks and mortar is not dead. Demand for retail space on the Portland Peninsula will remain strong. I mean, I think that's going to continue to happen. Demand for single-tenant retail properties should remain strong as well. Other national retailers will continue to be drawn to Portland's Old Port, waterfront, and downtown, especially if the right size space is available. And other retailers that have come recently are successful, which they have been. If Urban Outfitters wasn't successful, Anthropologie, which is owned by the same company, would not have opened here. Finally, as the U.S. economy heads into 2017, it seems to have the wind in its sails. There have been gains in employment, consumer spending, income, housing starts, and consumer confidence. And all in all, with all of that said, I think it'll be another strong year in 2017 for retail and the retail market in the Greater Portland area. Thank you very much.